CA Rajeev Sachdeva, faculty in auditing with the Board of Studies of the Institute of CAs of India. Will take lecture on company audit. In fact, this is last lecture on company audit. Students, it has been my endeavor to teach you how to study company audit, how to study law related subjects. Instead of finishing the syllabus, covering the syllabus, this has never been my endeavor. My endeavor is to teach you less, teach less, and acquaint you more about how the law has to be studied. So you need to concentrate on how to study. My emphasis throughout my lectures has been on how to study. Instead of covering the larger portion, instead of covering the larger portion, I have always insisted on smaller portion and explaining in detail. So students, first of all, I will read out the disclaimer. Yes, students, you are advised to refer to the study material, including supplementary, if any, and other relevant legislations for latest provisions, amendments required for forthcoming examination. Yes, you should remember and keep in mind that any change, be it in the Act and be it legislative amendment, circular, notification, rules, whatever has been issued, up to 31st October will be applicable for your examination. In each lecture, I have been telling you what is applicable for your examination. Statement on reporting under section 227(1)(a), now section 143(1) of the Companies Act. Framework for assurance engagements, SA 200 series, 300 series, up to SA 800 series. Then SREs, SAEs, SRS, all are applicable. Guidance note, students, this time a new guidance note has been inserted for your examination. That is guidance note on reporting under section 143(3) F and H of the Companies Act 2013. So point number 12, you may note down guidance note on reporting under section 143(3) F and H of the Companies Act. This is a new guidance note being applicable for this examination. Friends, in every lecture I am telling you one point more, that for the latest amendments you should study RTP, revisionary test paper for amendments, latest changes. You must study the RTP. So in each and every lecture I have been telling you how to study laws. So one thing I always emphasize on learning. As you all know, I do not say that learning is cramming. Cramming is such thing. If I ask you to study engineering course, engineering material, MBBS material, that is not the case. If you understand the whole thing and then you try to make the reserve of that thing in your mind, so that is after understanding only. and that is called learning. Unless and until you have sufficient reserve in your mind, I assure you, you would not be right. You would not be able to write well in the examination. Now, how to create reserve in your mind? How to create reserve in your mind? This is the only technique is learning. And learning techniques, I have been suggesting each time that you must learn, then revise at least for 4 times. I always give an example that if you learn today, say on 8th March, you learn section 140. This is the topic under discussion today. Then you need to revise this section again on 9th March, very next day. You need to revise section 140. Then after 1 week, 15th March or 16th March, 1 day, maybe plus minus. Then 4th time learning is after 1 month, say 15th April. This is again revise. And this you can take the help of schedule register, daily schedule register. I have been advising you to prepare schedule register also. So you should prepare schedule register. This register will help you in calculating the number of hours you study for 1 day. What average you achieve. Say you study for continuous 15 days. What is your average study per day? For example, 8 hours per day, 10 hours per day. And what your best potential you put in for a particular day, you can come to know from this schedule register. So schedule register helps you in many things. It monitors your studies. It is a well documented. It is a documentation of your studies. It is documentation what you study. So schedule register, with the help of this register, you are able to gain, you are able to enhance your marks, say 15-20 marks minimum, I say. This is my experience says. So prepare schedule register, concentrate on learning, and then you slowly and slowly. Another learning point which I emphasize is slow learning. Never be in hurry to learn. You must learn slowly. And so far as learning is concerned, you have 22 chapters in hand. It is not possible, students, to learn each and every chapter. So you should learn the company audit material, company audit and professional ethics. These two chapters in final CA final course, I am advising students to learn completely. Company audit, law related portion and professional ethics clauses. And the rest of the material, my strategy is learn the points and definition part, learn points and definition, and balance material you should read out in such a manner that you are able to give an output of say 60% at least of what you have achieved, of what you have learned, you read out. After reading out, you are able to give an output of at least say 60% of what you have read out in case of balanced material. So this is the strategy of preparation of auditing I have disclosed before you. In each and every lecture I am telling you, student, just follow this. This has very good results. This is time tested techniques I am telling you. Before I move to section 140, I take up the online queries, if any. Yes, moving to section 140. And before that, I explain you how to handle law related question in your examination. Provisions of the Companies Act, company audit law, basically provisions of the company law which are applicable on auditing. Also need constructive learning, as I told you earlier. In each and every law, please remember, whether you are studying income tax law, company law or any other law, please remember you must try to understand what the intention of the lawmakers is. Behind every law, I tell you, there is the intention of the lawmakers. You must understand that intention of the lawmakers. If you are clear, this will help your understanding. If you understand the intention, so this will definitely enhance your understanding, escalate your understanding level, and also there will be no difficulty in learning. So while you write your answers, please remember the basic intention of the lawmakers. Law should never be missing. Another important points I explained to you, always translate your knowledge into brief notes. You should prepare brief notes after gathering from the study material, after gaining from the study material. Translate whatever you have gained, translate your knowledge into brief notes. These brief notes will help you out at the time of examination. Students ask me, sir, how to handle a day before examination? So you can take help of brief notes, schedule register, learning. Learning gives you, definitely it gives you backup. You may also prepare diagrams in support, and what you can save is your time will be saved, your effort will be saved at the time, one day before examination. Case study based questions appear at the final level. So you have to understand the facts of the case. Do not handle the case laws in hurry. Understand the facts of the case. Provisions, try to apply, try to catch the provisions of the law, standard or accounting standard, auditing standard. Try to attack the problem from different angles, from the angle of law, from the angle of standards, from the angle of income tax, if any. So if you write the relevant law, standard, etc., then come to the conclusion part. Write down the complete facts in your own language, in brief, in 1-2 lines. Then give the relevant legislation, relevant law in support of the facts of the case. Write a big paragraph on that, and then write the conclusion part. This is how you should handle the case-based study questions. Write down the facts of the case in your own language. Please remember, do not copy that language which is written in the question paper itself. Provide applicable provisions and explanation, and then write the conclusion part as per your findings. You may quote your answer as conclusion part. You should write like this. Now, on the basis of provisions of the law, AS, SA, etc., and applying those provisions on the given problem, to the given problem, it may be concluded that. You should write like this. So this is how you should write the conclusion part. Now coming to section 140 of the Companies Act, that is removal, resignation of auditor and giving of special notice. Section 140 subsection 1. This is removal of auditor before expiry of the term. According to section 140 subsection 1, the auditor appointed under section 139, this is what I am saying, the auditor appointed under section 139 And 139 I have explained to you in detail. 139 is appointment of auditors in case of first auditor in case of government company, first auditor in case of other companies other than government companies, subsequent auditors in case of government companies, subsequent auditors in case of other companies other than government companies. So there are 4 points, 4 different points, and then there 139(2) rotation of auditors and so on. So auditor who is appointed under section 139, whatever the case may be. So section 141 states, section 140 subsection 1 states that the auditor appointed under section 139 may be removed from his office. Here we are using the word may. He may be removed. I told you in my first lecture, and subsequently I have also been explaining, 2 words you have to use with caution. One is may and other is shall. Whenever students, shall is used in any law, that is mandatory. That conveys the message that the provision is mandatory. So shall is always mandatory, whereas on the other hand may is discretionary. So auditor appointed under section 139 shall be removed. Here we are not using the word shall. Shall will be wrong. He may be removed from his office before the expiry of his term, means before the expiry of his term, 5 years, say, or 10 years in case of firm, if it is required to, if it is governed by the provision of rotation. Otherwise speaking, 5 years the term for which the auditor is appointed. So auditor appointed under section 139 may be removed from his office before the expiry of his term only by a special resolution. So auditor who is appointed under section 139, he may be removed, means it is possible to remove him from his office. From his office means office of the auditor. From his office means office of auditor. He is occupying, please remember, auditor is occupying the office of auditor in an independent position. Auditor is an independent entity. I explained in my first lecture, auditor is an independent entity. Auditor may be an individual, may be a proprietor firm. Auditor may be a partnership firm. So auditor, so far as auditor is concerned, auditor is independent. So the auditor appointed under section 139, he may be removed from his office before the expiry of his term only by special resolution of the company. Important words. He may, first of all, understand that he may be removed from his office. From his office means office of auditor before the expiry of his term. Before his term has expired, he may be removed. There is possibility that he may be removed. It is possible. Answer is yes. So question whether an auditor can be removed before the expiry of his term, answer is yes, he may be removed. But you need a special resolution of the company, and special resolution will be passed only if the company, after, important word is after, very important, after obtaining the previous approval of the central government in that behalf as per rule 7 of the CAR, Company Audit and Auditors Rules 2014. So this is all about section 140 subsection 1. Again I am explaining, students. The auditor appointed under section 139 may be removed from his office before the expiry of his term only by special resolution of the company after obtaining the previous approval of central government. Central government approval is required in that behalf as per rule 7. I will explain what rule 7 is. So, as I was telling you in my strategy part, you should prepare the brief notes. This is how you should prepare the brief notes. This is notes part. According to section 140 subsection 1, the auditor appointed under section 139. This I have already emphasized. Auditor appointed, we are talking about auditor who is appointed under the legal provisions of section 139. It is possible for a company to remove its auditors. May be removed. We are using the word may be removed from his office before expiry of his term, but only by way of special resolution. You need to pass a special resolution. Special resolution, as explained in Company Act, is 3/4 majority, as you all understand. But this special resolution is after obtaining the previous approval of the central government in that behalf, as per Rule 7 of the CAAR. So, students, there are 4 points you should keep in mind. And this is again, if you notice that learning is a key fundamental of learning. If you ask me really, key fundamental of the learning is slow learning. This is the methodology you can learn. As I am explaining to you, you should learn simultaneously. If you are able to learn at this moment of time, then you revise this lecture tomorrow, then after 1 week, and then after 1 month. I assure you, you will never, this will be a strong reserve in your mind. And this will get cemented in your mind. You will never forget, I assure you. Before moving further, I take up online query, if any. Section 141, subsection 1, states that removal of auditors before expiry of his term requires special resolution of the company, as in 4 points, special resolution of the company plus previous approval of the central. This is the legal formality a company has to complete. So, removal of auditors before expiry of his term requires. This is a different forms we are explaining section 1. We are on section 140 of section 1. But we are studying the section from one angle, another angle, then another angle. So this is the whole process of slow learning. And also simultaneously brief notes are automatically prepared. Section number is also, it gets permanent place in your mind. So you are able to learn so many things. You are able to gain so many things by way of this methodology. Removal of auditors before expiry of his term requires special resolution of the company and the previous approval of the central government in that behalf, as per Rule 7 of the CAAR. Now moving further, this is all about section 141. I have explained you from many angles. Hopefully it is clear to you all. Now Rule 7, procedure for obtaining previous approval of the central government. This is in fact the procedure for how the auditor will be removed. Point number 1, please note. The application to the central government, the application, we need to apply to the central government. First step is if you study section 141, after obtaining previous means first step will be to get approval of the central government. So first of all, first thing I will have to do will be to apply to the central government for removal of auditor in form number ADT2. This is the form number, form ADT2. ADT2. And this application which I am making to the central government, it shall be accompanied with the fees which is provided under the company's registration offices and fees rules 2014. There are different set of rules, I tell you. So this Companies Act 2013 is rule based. So simultaneously, along with the sections, you need to take up the rules also. You need to study rules also. Only then your knowledge will be complete for the purpose of examination and for the sake of your knowledge also. So rules, study of rules is very must, because all procedures are explained. The procedure company has to do compliance with are explained in rules. So first important point is application to the central government will be made in form number ADT2 and it shall be accompanied with fees as provided for the purpose under the company's registration offices and fees rules 2014. Now this is the way I am simultaneously explaining to you how to prepare, prepare brief notes. Understand that line in full, understand the substance of that section, rule, then convert it how you can easily remember that. So application to the central government regarding removal of auditor will be made in form number ADT, form ADT2, and shall be accompanied with prescribed fees. So you need to give an application. First point is nothing but this is an application to the central government, like you apply for a loan to the bank. So you need to give your application for loan in the prescribed form which is prescribed. So here the removal of the auditor, the Companies Act has provided a specific form in this respect, that is form ADT2, and a certain fees which is prescribed in company's registration offices and fees rules 2014. So I need to make my application to the central government. Company need to make application to the central government in form ADT2 and shall be accompanied with prescribed fees. Second point. The application shall be made to the central government within 30 days of the resolution passed by the board. Now the application which I am making to the central with the company, you know, you all are aware that the company is always governed by a body which is called the board of directors. Company is not a natural person. So if company is not a natural person, then it has to be governed by an authority, and that authority body is called board of directors. So if any specific, any special, any out of routine activity has to be done, board resolution is a must. So if this step is to be taken, application to the central government for removal of auditor, imagine, can it happen without passing the board resolution? Answer is no. So board resolution, this is automatically linked. If you are writing point number 1, point number 2 should automatically come to your mind, then board resolution might have been passed. So this is called a sequential learning. This is called a sequential learning. If point number 1 enters my mind, point number 2 will automatically be there in my mind. That application to central government will not have been made without the resolution of the board of directors, isn't it? So application shall be made to the central government within 30 days of the resolution passed by the board. So first of all, board will pass a resolution in which the board will say that auditor needs to be removed, and in this respect, what are the procedures which are laid in the Companies Act? We will fulfill the procedures and auditor be removed. And after passing the board resolution, then they will make an application to the central government in form number ADT 2 and with prescribed fees. So this is how you can convert your knowledge into brief notes. Pass board resolution and apply within 30 days of the board resolution to the central government. So simultaneously I am explaining to you that how to prepare brief notes also. Point number 3. The company shall hold the general meeting. Now the central government approval has been done. What section 141 was telling? That auditor shall be removed from his office, may be removed from his office before the expiry of his term with the help of special resolution after obtaining previous approval of central government. Now special resolution is a must. So company shall hold the general meeting after the important word I told you that it was after. Again I come back to that. After obtaining the previous approval of the central government. Now the approval of the central government is there. Now the company will pass special resolution. Now the approval of the central government has been obtained. Now special resolution will be passed. So company, how the special resolution will be passed? Naturally, company will call a meeting. So company to call general meeting, to hold general meeting within 60 days of central government's approval. Within time limits you should keep in mind. Within 60 days of central government's approval, company to hold general meeting and pass special resolution in that general meeting. So this is, students, all about rule 7. Before I move further, I check whether there are any online queries or not. Now you may note that, students, before taking any action for removal before expiry of term or terms, the auditor concerned shall be given a reasonable opportunity of being heard. Very important provisions. It means that whenever you are going to do any injustice, you are going to do something which may not suit anybody, which may not be according to his choice, which he may not have expected, in other words. So remember the principles of natural justice. Principles of natural justice require in tax laws also, whenever you are going to impose any financial burden on any assessee, then you must give him a reasonable opportunity of being heard why such financial burden should not be imposed upon him. So this is the demand of the principles of natural justice. Those students who have cleared group 1, so they will understand definitely that in income tax law there is always this principles of natural justice are adhered to by the assessing authorities. So whenever you are going to impose, I repeat, any financial burden on any assessee, you must give him a reasonable opportunity of being heard why such financial burden should not be imposed upon him. So here something harsh is going to happen with the auditor. He is going to be removed from his office. So it becomes a duty of the company that before taking any action for removal, before expiry of his term, of course, he shall be given a reasonable opportunity of being heard why he should not be removed from his office. That why he should not be removed from his office. So this is the requirement of principles of natural justice. Auditor to be given a reasonable opportunity of being heard. Now I move to section 140 subsection 2. Section 140 subsection 2 states that the auditor who has resigned from the company, he shall file within a period of 30 days from the date of resignation, his resignation. Now he has resigned from the company. Section 140 subsection 1 was removal, and section 140 subsection 2 is resignation by the auditor. So here we are talking about resignation. The auditor who has resigned from the company shall file within a period of 30 days from the date of resignation. Now this period you should remember, the auditor who has resigned from the company shall file within a period of 30 days from date of resignation. He will file a statement in prescribed form, and please note that form is ADT3 with the company and registrar. This formality of filing ADT3 be done with the company, this procedure, and also along with this he will file this form ADT3 with the registrar. And students, if the company is a government company, in case of the companies referred to in section 139.5 and section 139.5, you may remember that government companies, section 139.5 is government companies. The auditor shall also file such statement with the CAG of India, indicating the reasons and other facts as may be relevant with regard to his resignation. Now the auditor, if it is a government company, the auditor, he has got another responsibility to file such statement with the CAG of India also. And he will also tell the reasons and other facts with regard to his resignation. Now how to prepare? How do we go with the brief notes? See how we can prepare the brief notes. Section 140 subsection 2 is on resignation of the auditor. Resignation by auditor. It provides that where the auditor resigns from the company, his duties are as under. He shall file within 30 days of resignation. Within 30 days of resignation, a statement in the prescribed form, and form is ADT3, and his responsibility is to file this form ADT3 with the company and the registrar, and therein he will indicate the reasons and other facts as may be relevant with regard to his resignation. I again explain section 140 subsection 2. It provides that where the auditor resigns from the company, his duties are file within 30 days of resignation, statement in the prescribed form ADT3 with the company and the registrar, indicating the reasons and other facts as may be relevant with regard to his resignation. In case of such companies which are referred to in section 139(5), that is government company, auditor has got additional responsibility. He shall also file such statement in ADT3 with the CAG of India. So he has got this responsibility in case of government company to file such statement with the CAG of India also, indicating the reasons and other facts as may be relevant with regard to his resignation. If the non-compliance, what happens if there is non-compliance of subsection 2? If the auditor does not file such statement, students, he or it shall be punishable with fine not less than 50,000 rupees. If he doesn't follow this subsection 2, he doesn't file a statement. Now what section subsection 2 states? He doesn't file a statement within 30 days, this in form number 83, with the company and registrar. So Act has the power to impose fine also, and 50,000 rupees fine on the auditor, but which may extend to also 5 lakh. This is the maximum and minimum penalty. So penal provisions are also there. Section 140 subsection 4. Now special notice. This is regarding special notice in case of appointment of auditor other than the retiring auditor. Special notice shall be required for a resolution at an AGM. Here we are talking about special notice. Special notice is normally a 14 days, minimum 14 days notice. That is called special notice. Special notice shall be required for a resolution at an AGM appointing as auditor a person who is other than retiring auditor. Retiring, some students have asked me that who is a retiring auditor. I say the retiring auditor one who has completed his term, that is retiring or outgoing auditor, or providing expressly that a retiring auditor shall not be reappointed except where the retiring auditor has completed a consecutive tenure of 5 years, or as the case may be 10 years. as provided under subsection 2 of section 139. So special notice shall be given for a resolution at an AGM appointing as auditor a person other than, if I am appointing a person other than a retiring auditor, or providing expressly that retiring auditor shall not be reappointed. But exception, look at the exception. I am not covering the cases where the retiring auditor has completed, now he has completed his tenure of 5 years or tenure of 10 years, then there is no need of special notice. So special notice will not be required, students, if I have as an auditor, if I have completed my tenure. If in case of individual, I have completed my 5 years tenure, and in case of partnership firm, I have completed my 10 years tenure. So special notice shall be required for resolution at an AGM appointing as auditor a person other than a retiring auditor, or providing expressly that a retiring auditor shall not be appointed, except where the retiring auditor. Now this is the only exception, all other matters will be covered in this special notice. So this is how you can prepare the brief notes. Special notice shall be required for a resolution at an AGM appointing as auditor a person other than a retiring auditor, or providing expressly that a retiring auditor shall not be reappointed, except where, and exception as I have already told you, that retiring auditor has completed his tenure. It may be 5 years, maybe 10 years. On receipt of notice of such a resolution, now company has received a special notice. Now special, on receipt of such a notice, the company shall send a copy of thereof to the retiring auditor. Now the company will send a copy of notice to the retiring auditor. Where a notice is given of such a resolution and the retiring auditor makes with respect thereto represent. Now the notice is given of such a resolution and retiring auditor wants to make representation in writing to the company, not exceeding a reasonable length, of course, and requests its notification to the members of the company. Then company shall, now what the company shall? Now the company shall, unless it is received too late, this you need not do. Unless it is received too late for it to do. Now what the company can do? Where a notice is given of such a resolution and retiring auditor makes a representation, he wants to make representation in writing. Now he has received a notice and requests the notification, and he wants the representation in writing and requests the company to make and request its notification to the members of the company. So in simple words we can write like this: where the retiring auditor makes representation in writing to the company and requests its notification to the members of the company shall where the retiring auditor makes representation in writing to the company and requests its notification to the members of the company shall A. In any notice of the resolution given to the members of the company, State the company shall simply state the fact of the representation having been made. So in any notice of resolution, so subsequently if company gives any notice of resolution given to members of the company, company will state the fact of representation having been made. So this is what the company will do. So company will state the fact of the representation having been made. This is in simple words. You can prepare the brief notes. Or B, send a copy of the representation to every member of the company. Now the company, in any notice to the members of the company, first point was, in any notice to the members, state the fact that representation has been received. And now B, send a copy of the representation to every member of the company. Send a copy of representation. Now representation which has been received by the company, it will be sent to every member to send. To whom notice of the meeting is. Every member to whom notice is being sent. Now copy of representation will also be given along with. Whether before or after the receipt of representation by the company. Send a, in simple words, send a copy of representation to every member to whom notice of the meeting is sent. So company shall A, state the facts of the representation, state the fact that the representation has been made. B, send a copy of representation to every member to whom notice is being sent. If a copy of representation is not so sent as aforesaid, now a case may be that copy of representation is not sent because it was received too late or because of the company's default, whatever the case may be. If a copy of the representation, students, is not sent as aforesaid because it was received too late or because of the company's default, then the auditor may require that the representation shall be read out at the meeting. Now, auditor may require, he has a choice here. We are not saying auditor shall require. Auditor may require that the representation shall be read out at the meeting. This is what the auditor may require. This is in case representation is not sent along with the notice. Yes, students, if representation is not sent as aforesaid we have mentioned, means along with the notice which was sent to the members of the company, because it was received too late or because of the company's default, auditor may require that the representation shall be read out at the meeting. If a copy of representation, this is how you can prepare the brief notes. I am explaining. If a copy of representation is not sent as aforesaid, a copy thereof shall be filed. Now, this is another point. This is basically next point. If a copy of representation is not sent as aforesaid, a copy thereof shall be filed. Now, the company shall file. It is the responsibility of the company to file a copy of it with the registrar. This is, students, all about section 140. I have explained in detail. Now we move to online queries, if any. Yes, next section, section 141 of the Company Act 2013, that is eligibility, disqualifications and disqualifications of auditors. eligibility, qualifications, and disqualification of auditors. Section 141, subsection 1. A person shall be eligible for appointment as an auditor of a company only if he is a chartered accountant. Means only chartered accountant will be eligible for appointment as an auditor of a company. And in case a firm is appointed, the majority of partners practicing in India are qualified for appointment, as aforesaid, may be appointed by its firm name. In case of a firm where majority of partners practicing in India are qualified for appointment, means they are chartered accountants, may be appointed by its firm name. So auditor, in case of firm, you all know practically that firm is appointed by its firm name. Where a firm including a LLP is appointed as an auditor of a company. Where a firm including a LLP, limited liability partnership, LLPs have also been allowed to form partnership, to form firm of chartered accountants. So where a firm including a LLP is appointed as an auditor of a company, only the partners who are chartered accountants. Now what we are saying, only the partners who are chartered accountants shall be authorized. Here two words you should remember: to act and sign on behalf of the firm. So only the partners who are chartered accountants would be authorized to act and sign on behalf of the firm. Under subsection 3, section 141, subsection 3, this has to be read along with rule 10. The following persons shall not be eligible for appointment as an auditor of a company. Namely, the following persons: body corporate is never allowed. Body corporate is disqualified. Following persons are not qualified. Other than a body corporate, other than LLP, registered under the LLP Act. So body corporate is disqualified. Officer or employee of the company is disqualified. C. 141(3)(c). A person who is a partner or who is in employment of an officer or employee of the company. A person who is a partner or who is in the employment, person who is a partner or who is in employment of an officer or employee of the company. So here are four possibilities you can see here. Following persons are disqualified from being appointed as auditors of a company: partner of an officer of the company, employee of an officer of the company, partner of an employee of the company, employee of an employee of the company. So four possibilities emerge from this 141(3)(c). So you may note down the four possibilities. Following persons are disqualified from being appointed as auditor of a company: partner of an officer of the company, employee of an officer of the company, partner of an employee of the company, employee of an employee of the company. Example I am skipping. 141(3)(d). A person who or his relative or partner. So D, there are three clauses. A person who or his relative or partner. There are three possibilities: who himself, or his relative, or his partner. A person who or his relative or partner is holding any security. Here word is any security. But Here there is one exception. Relative may hold security or interest in the company of face value not exceeding. Here we are not using the word market value. Please remember, here we are not using the word market value or other value. Here you should note that it is face value, not exceeding. So relative is allowed to hold security or interest in the company face value not exceeding 1 lakh. A person who or his relative or partner, a person who or his relative or partner is holding any security of or interest. Now here are again there are 4 possibilities: in the company or its subsidiary or its holding or associate or subsidiary of such holding company. There are 4-5 possibilities. A person who, I am discussing 143, 141, 3D1. This is how 141, 3 subclause D, subclause 1. A person who or his relative or partner is holding any security of or interest in. Now look at the possibilities: in the company or its subsidiary or of its holding company or associate company or a subsidiary of such holding company. There are 5 possibilities. And once you learn these possibilities, you can use this in all D1, D2, D3 clause. 141, 3D1, 3D2 and 3D3 clause. A person who or his relative or partner is holding any security of or interest in now company or in its subsidiary or holding company. Now company, subsidiary, holding, associate and subsidiary of holding company, or relative has been allowed to hold face value, security of face value not exceeding 1 lakh. Up to 1 lakh he can hold. Example I am skipping. Now 143D2 is indebted a person who or his relative or his partner. Now that will remain the same. It is indebted to the company now again for 5 points. To him, subsidiary, holding, associate, subsidiary of such holding. In excess of amount here is 5 lakhs. A person shall be disqualified to be appointed as auditor if he, this is 141, 3, this is D2. D2. A person shall be disqualified to be appointed as an auditor if he or his relative or his partner is indebted in excess of 5 lakh to, now 5 possibilities, to the company, subsidiary, holding, associate, subsidiary of such holding company. This is 141, 3D2. 3D1 is clear. Holding of any security. 3D2, indebted to. And 3D3 is given any guarantee. 3D3. This is the 3D3. 141, 3D3 clause has given any guarantee or provided any security in connection with the indebtedness of any third person to the company, subsidiary. Now again there are 5 possibilities, and in excess of 1 lakh. Here we are talking about guarantee, given any guarantee. One clause, holding of any security. However, relative may hold security of the face value not exceeding 1 lakh. Then 141, the 3D2 was indebted to up to rupees 5 lakh. Now D3 is given any guarantee in excess of 1 lakh. All 5 possibilities are there. A person shall be disqualified to be appointed as auditor if he or his relative or his partner has given a guarantee or provided any security in connection with the indebtedness of any third person in excess of 1 lakh to the company, subsidiary, holding, associate, subsidiary of such holding company. So once you learn, you can have benefit on all the three clauses. So students, basically I tried my best to explain to you all how to study the law instead of teaching you that thing. I was explaining with the help of these sections. I explained to you how to study the laws. So with these words, students, I move to online query, if any. Yes, students. Hopefully you might have gained an overall understanding as to how the law, be it company law, income tax law, or the company audit, as I was explaining with the help of company audit. How to study, I have explained in detail. Now, this is particularly my last lecture so far as the company audit is concerned. In next lecture, I will be discussing professional ethics. So thanks for patiently listening to me. If you have any query, any suggestion, you may contact us at our email ID rajeev.sachdeva@ici.in or karuna.bhansali@ici.in. Also, students, you may note our contact and you are free to contact us. 01203045 Thank you very much, students. Thank you very much, students.